In this video, I'll walk you through how to invest in the stock market step by step, from A to Z. A lot of people have asked me, how do I start investing in stocks as a total beginner? Or what's the best way for new investors to get started? If you start off on the right foot, you can save yourself a ton of time and money. So today, I'm going to show you exactly what steps to take as a beginner to become a professional level stock investor from zero to hero. As you probably know, the top 25% wealthiest people in the world are stock market investors. People like Warren Buffett, George Soros, Ray Dalio, and Jim Simons. They're not just rich, they shape global economies. And guess what? Most of them started with very little capital. With the right investment methods, professional portfolio management, and years of consistency, they turn small amounts into hundreds, even thousands of times more. Today I'll show you exactly how they did it. You'll learn from their strategies and apply them to your own journey. This is Think Like a Great, your go-to channel for investing, finance, and stock market knowledge. By applying principles used by billionaire investors, I've managed portfolios that outperformed the market. Now I'm ready to share these insights with you. Don't forget to subscribe and keep watching. Alright, let's get started. What is the stock market? To make money from stocks, you need to understand what they are. Stocks are special financial instruments represented by certificates, book entries, or digital data. They prove your ownership rights over assets or capital in an issuing company. There are four main types of securities: stocks, bonds, funds, shares, derivatives. Let me break them down clearly with real-life examples. Types of securities. 1. Stocks. What are they? Imagine you start a company selling family secret bubble tea. You register a joint stock company with $100 million in charter capital. Your mom and your sibling are shareholders. Each share is priced at $10. Share. You contribute property, equipment, furniture, plus working capital for materials and wages. Total value $100 million after registration and setup. You now own 10 million shares. 100 million divided by $10 equals 10 million shares. That's how easy it is to own your own company shares. Now all you need is buyers once listed on the stock exchange. You can sell these shares to others. 2. Bonds, also known as debt securities. Your tea business is booming. You want to expand by more tables and chairs, but you don't want to dilute your ownership yet, so you borrow $50 million from your wealthy uncle at 15% interest per year. You issue him a bond worth $50 million with 15% annual interest. Your total capital is now $150 million. Of that, $100 million comes from equity and $50 million from debt. This is a loan. Before paying dividends to shareholders, you must repay this bond first. 3. Derivatives, futures and options. Now, your tea company is doing great. Your neighbor sees potential and predicts your stock will rise from $10 to $50 per share. Next year, he buys an options contract to purchase your shares at $15 share. Next year, he pays only $2 per option. Even if your stock doesn't rise, he only loses $2 per share maximum. But if your stock hits $50, he makes a profit of $35 per share. That's a return of 17.5x. Impressive. For fund shares, 2 years later, your neighbor becomes successful. He starts his own fund company specializing in tea-related investments. He raises $500 million from investors to launch Tea Fund 1. This fund invests in companies like yours. Then he lists Tea Fund 1 on the stock exchange. Later, he launches Tea Fund 2, Tea Fund 3, and keeps growing. Now, you know the four basic types of securities: stocks, bonds, derivatives, fund. Shares investing means choosing among these products. Profits come from price changes, dividends, and interest. Section 3. Where and how to trade stocks. Where can you trade stocks? There are 3 main places in Vietnam: Ho Chi Minh Stock Exchange, Hos Hanoi Stock Exchange, HNX. OTC markets, where unlisted companies trade. Trading on HOSE and HNX is simple. Just open a brokerage account to hold your money in shares. OTC trading happens off exchange. You can buy unlisted shares through brokers. Similar to buying real estate. They connect you with sellers and help with transfer procedures. Opening a brokerage account before you can trade. You need a brokerage account like a bank account, but for stocks. There are over 70 brokerages in Vietnam, but I recommend only the top 10. Those with the largest market share. These firms are stable and likely to stay in the industry long term. Smaller brokers may struggle financially and could shut down or merge. To find the best ones, check HSX's official site. They publish monthly rankings. Choose at least 3 brokers to compare services, apps and support. Then pick one you trust for the long run. Trading fees in the stock market are quite low compared to other assets. Here's what to expect. Stock trading fee, 0.15% to 0.4% to 0.4% per transaction. Derivatives fee, $1,000, $5,000 per contract. Transfer tax, 0.1% per transaction. Dividend tax, 5%. Very affordable, especially considering the potential returns. Most brokers list detailed fees on their websites. Placing orders and tools you need. You can place orders using many types. Limit order, market order, ATAC, conditional orders. Each has its use. Brokers like SSI, Techcombank and VPs offer clear guides. But beyond placing trades, you need tools to analyze the market. Some I use daily. HSE Market Board for real-time stock prices. TradingView for technical analysis. CAFEF.VN for Vietnamese. Market News Company reports for fundamental analysis. Also, follow international sources like Reuters for macroeconomic updates and policy changes. Choosing your investment style. There are many ways to invest. Index funds, growth stocks, value investing, day trading, technical analysis. Following billionaires like Warren Buffett, you should try different methods with small amounts and careful observation. Eventually, you'll find the strategy that suits your personality and mindset. I personally prefer active trading with derivatives and growth stocks. It fits my calm mindset and discipline. Whatever method you choose, remember, stick to your rules, exit fast when things go wrong. Hold longer when they go well. 3 key principles for success. 1. Use compound interest. Albert Einstein once said, compound interest is the 8th wonder of the world. It's like watering a tree every day. The tree grows slowly at first, but over time it bears huge fruit. Warren Buffett earned an average of 20% annually. After 13 years, that multiplies your capital by 10x. Imagine investing $10,000 in 1965. By 2020, it would be worth $188 million. That's compound interest in action. Tip: avoid big losses. Focus on reinvesting profits every year. I've created a free Excel calculator. You can download it in the description. Try this example. Invest $20,000 at 30% annual return over 9 years. Result: $20,000 gives $212,000. That's over 10x growth. Point 2. Manage your portfolio well. Successful investing isn't just about picking winners, it's about managing risk. Accept small losses quickly. Don't wait for the market to recover. Many smart investors fail because they ignore this rule. They win 90% of the time, but one bad loss ruins everything. I aim for around 70% accuracy, and I cut losses early. Over time, this habit builds consistency. Tip: a 30% loss takes 15 years to recover. A 50% loss takes 25 years, so protect your capital always. 3. Practice daily. Thomas Edison said, genius is 1% inspiration and 99% perspiration. Same with investing. Knowledge alone won't make you rich. You need consistent practice. Here's how to improve daily. Keep a trading journal. Make decisions independently. Read trusted sources. Spend at least 30 minutes daily learning. Use tools like TradingView to track trends and record your thoughts. 3. Essential skills to build one. Fundamental analysis. Learn to tell good stocks from bad ones. Understand economic cycles and how interest rates, inflation and policies affect industries. Read financial reports carefully. Look for key indicators: revenue, profit, debt. Avoid scams like fake profits or phantom capital increases. I made a video titled Ordinary Stocks, Extraordinary Profits based on Philip Fisher's classic book. Check it out. 2. Technical analysis. Study trends to time your entries and exits. Master chart patterns, volume signals, and key candlestick formations. Use TradingView to draw trend lines. set alerts, and track performance. Also learn common order types, limit orders, ATCMP orders, and, above all, cut losses and take profits according to your plan. 3. Mindset and psychology. Research shows 90% of your results come from psychology. When you're calm, you make rational plan decisions. When fear or greed kicks in, you make impulsive mistakes. Even experienced investors fall into emotional traps. The secret: recognize your emotions, then act wisely anyway. Only through real experience can you build true resilience. So now you know the 5 steps to start investing, the 4 main types of securities, how to open an account and choose a reliable broker, 3 key principles for success, 3 essential skills to master. Now it's your turn. Which type of security will you start with? What investment style suits you best? Leave a comment below and don't forget to subscribe to Think Like a Great for more valuable lessons.